Welcome to Subramani. Uh, some of the learnings over a long period of time, including from people like Warren Buffett, I would like to summarize and say first thing Warren Buffett says is diversification is not a great idea. For experienced investors, concentrated investing makes more sense. This is absolutely true. Now, if it is not your profession, if you are going to hand your money over to someone, you're much better off with an index fund which is diversified, because you don't want to spend time on picking up stocks or picking up funds and hoping for the best, because there's no guarantee which fund will perform well and all that. So let's say you're 70% in large cap index and 20% in the mid cap index and 10% in a small cap index, maybe in an ETF or in a regular mutual fund. Doesn't really matter. Costs in India are extremely low, so it doesn't matter how you are diversified. But if your main job is to invest, if you are like me, that you've been a member at the stock exchange and things like that, then I would advise stocks. Otherwise, it's a difficult job, perhaps thankless, perhaps the returns are not justified. I mean, you may be having fun. You may say, oh, today I need to do something. I sold A and bought B. I sold a dog and bought a cat. I sold a cat and bought a donkey. Right, that's a different thing, but the need to do it is not there. And if you have been doing it, if you have been investing in an index fund, you have been investing in direct equity, etc., check which is doing better, because that is what is going to make money for you. Second, for most investors, this is true that you're not going to make your primary money from the markets. You're going to make your primary money from your profession. So whether you're an employee or whether you're a practicing professional, whether you're a doctor, lawyer, chartered accountant, your main money is going to be made in your profession. Let's take the case of a dentist with who is in one location, which is a good location, has to then diversify and go and get a better location, because that is where the money is going to be made, especially if there are enough kids in the house, siblings, wives, nephews, nieces, son, daughter, a lot of people available in the house doing the same profession. It's all the more reason why you should first of all geographically diversify. Maybe one, you're in a poor locality, and second, you need to go to a higher locality. Maybe some of your children in the family need training on how to deal with high net worth individuals or high net worth customers, right? That is where you're going to make your investments, and that is where you're going to make money. Your investment is largely a place where you should not lose money, rather than the place where you should be making money. If you make money, great. If you don't make money, great. But the thing is, don't lose money. That is far more important. So not losing money is very important. And when I'm saying losing money, people think they should not make any losses. That's not true. If the market falls 30% and your portfolio has fallen 20%, you're doing well, right? So that is how you have to look at it, and not say, oh, I should never lose money. You will of course make some losses, but it should not be too bad. And you should know why it is happening and what remedial actions to take. Don't say that you should never lose money. Largely fund managers who have done well, or even those who have done well with their personal investments, have done well in the last, say, 20 years in India, is largely because they did not withdraw when the situation was bad. So if you withdrew somebody sometime in March to July, August 2020, and I know people who did, then you have lost money simply because of wrong time of withdrawal. And you have made money because you entered in maybe 2002 and you did not sell. It's okay, you took the 2008, 2007, 2008 fall, you took the March 2020 fall. It doesn't really matter as long as you kept investing, because March, let's say 2002 to 2024, we have not had a long, say, 3-year recession or a 4-year recession. Sorry. And I don't think today neither Biden nor Mr. Modi will let a long recession stay. Within 3 months, they will do something, reduce GST, remove the dividend tax, something they will do to revive the market. The governments don't have the guts to let the market remain low for too long. So that is one huge advantage today you have as an investor, right? It is also important that while you are investing, it's fine, you have to invest in yourself. in the sense that like I said, you have to invest in your business, you have to invest in your ability to understand markets and what is happening, provided you want to make this your profession. Otherwise you just have to learn the ability to sit tight over long periods of time, carry cash without worrying about the cost of cash, carrying cash, carry cash saying when the market falls I will buy, right? Or when the VIX is high, if the VIX is 70 I will buy, right? A high volatility index is a great indicator that there is fear in the market and therefore you should be buying. But that is exactly at the time when you will be scared, like when the VIX was at 70, I think March 2020, you may not have had the guts or the willingness or the ability or the cash to invest, right? So those things will happen. So invest in yourself, invest in learning, invest in your business. That is more important. And no fund manager is going to tell you this, because he is going to come and sell some product to you, right? Or an advisor is going to sell a product. What is the advantage for an advisor to tell you, take care of your health, grow your business, invest in people, right? He has no interest in doing that. He is to just go home and say, how much of a check did I bring, because he has a product to sell. It's very difficult for a person with a product to sell to give just appropriate advice. Believe me, just trusting yourself to be a good successful advisor is very important, because or even a successful investor is very important, because people are always under the fear, oh, my father did a bad job, my grandfather lost money during this time, or right, things like that. That's not the way to look at it. The way to look at it is to say, I will be a successful investor. Maybe I will start with index funds, that's a diversified fund. Then I will go for concentrated bets, I will buy equity, I will learn, and I will do this, right? So believing that you are going to be a successful investor is again a very important and of course, like what Buffett says, invest where you understand. What you don't understand is not a great business to understand, a great place to invest. If you had bought Paytm at 1200, I'm wondering what your inner soul is telling yourself, what your inner voice is saying. 1200 was not bad, so many funds were buying, so many fund managers had a stake, therefore you bought, so it's not a bad deal, right? Largely it was a bad deal, not because of anything else, because you did not know what that business was going to do, what it was capable of, what risk it was taking. Then RBI told you about the risk that it was taking, and the market brought it down from 1200 to 300 or 340 or whatever, right? So making investments that you understand is very useful, because when you lose money, you know how to go back and correct it. If you don't know how to correct it, it means it was a mistake that you made in the first step itself. Also, once you have invested, choose the right channels to see and the right news to focus on. Right now, in the Indian conditions, I'm making this in May 2024. Nobody knows who is going to win. There is no opinion poll, there is no exit poll, but everybody seems to be saying, oh, Modi is not winning so well, he will not get 270 seats. Depending on the channel that you watch, somebody is saying he's getting 400, somebody says he's getting 200. The truth obviously is somewhere in between. Between 200 and 400 is perhaps 300. So maybe 300 or 325 or somewhere is the truth, right? So we don't know where is the truth. So choose which channels to watch and what news to concentrate on. There is so much junk coming in every day, and you're wondering what does it even mean. So staying away from stupid news is very important, and that is something which will save you a lot of money. You will not panic, you will not buy or sell during absolutely inappropriate times, right? So that's also important. Buffett has said this time and time again, buying a share is like buying a part of a person's business. Also right now, I find that your holiday, your travel, your airline businesses are booming, which is a great indicator that the economy is doing well. People don't go on a vacation when their businesses are not doing well. So it's a very good indicator that the businesses are doing well, and therefore the indicator, the market volatility, VIX is very low, maybe in its late teens or 20s, which shows that the market is not expecting anything dramatic to happen with the election results, and so I may be digressing if I keep talking about election results. That's not the purpose, right? So when buying a stock, you're buying a business. So if you understand the business, understand that it will take 3 years, 5 years, 10 years for the business to make money, and that is when you will start making money. It is very important to maintain a diary so that you write down your mistakes, you write down every day whatever you think, and then you laugh at yourself for saying, I bought this share because it said, because I thought it like this, and it actually did well because of some other reason, right? You at least know where you're going. A book can be a fantastic place to learn and move on. Say, okay, I learned this from this mistake I learned, right? So keep a book or keep a page where you write down the mistakes that you make and the learning that you get. Mistakes we all will make. What we learn from it is important, right? One of the worst things that you can do to be a good investor is to be a day trader. Don't even think that day trading experience is going to be useful as an investor. It won't, right? So make your choice. I don't like to trade. At least I'm not a day trader. If I made a bad trade, I know I can afford to wait till it reaches a particular level, or I get out at a loss. So being a day trader, not something that I would recommend, but then I can't stop you from doing it simply because so many others are doing it, right? So some of my learnings. Thank you.